HODL versus trading. Which one is more profitable? If you've been in the crypto space long enough, you've probably heard the term HODL or seen some HODL memes by now. Whether it's HODL, diamond hands, hold the line, this all originated in the crypto space. But on the other hand, I'm sure you've also heard and seen of people trading, whether the price of Bitcoin goes up or down, and making profits on both sides. So should you be hodling or should you be trading? What's right for one person might not be the right answer for the next person. So let's go ahead and talk about it today. Hey, what's up? Jay here, and welcome to Bitcoin Daily, bringing you guys the best tips, tutorials, and ideas to help you guys become profitable and successful traders. The goal of this channel is to empower you guys with the resources and knowledge to help you guys get to that next level. So if you guys are new here, make sure to subscribe and turn on the notification bell. Also, don't forget to smash that like button. So HODL versus trading, let's talk about it. So when talking about hodling versus trading, before we even get into that conversation, let's first talk about just investing overall and buying Bitcoin overall. Here are a few things to note when buying Bitcoin. It's not a good idea to borrow money via loans to invest in Bitcoin or other cryptocurrency. It's even a worse idea to purchase cryptocurrency with credit cards, as they will charge you cash advance fees, which usually carry a higher interest rate. Next, don't invest money that you can't afford to lose. The majority of cryptocurrencies are not going to survive. If you're invested in a cryptocurrency that goes to zero, you're not going to get bailed out. You're not as lucky as banks or airlines. So make sure to conduct extensive research on the coins that you're looking at and be careful of recommendations that you find on social media. That includes YouTube, Instagram, Twitter, and any other message boards that you might be looking on, especially Reddit. So let's talk about HODL, the long-term strategy. So what is HODLing? HODL itself is a cryptocurrency slang which originated when a drunk Bitcoin Talk user made a post where he misspelled hold in the face of falling Bitcoin prices back in 2013. HODL is essentially a long-term approach where you purchase and hold Bitcoin and other cryptocurrencies without regard for the short-term fluctuations in price. It involves holding the investment for a long-term period or until another condition is met. This is the lowest effort and easiest strategy to adopt. It's based on the assumption that the price of Bitcoin and other cryptocurrencies will see a rise in real value over the long-term time period. This approach completely ignores short-term volatility, which is an inherent feature of the cryptocurrency markets. Even if the price of Bitcoin drops off a cliff, investors committed to the HODL strategy shouldn't do anything unless the fundamentals have changed. So the whole idea for HODLing is to keep it simple but not stupid. Despite its simplicity, HODLing shouldn't be goalless. You might want to consider the following points. The first question is, what cryptocurrencies are long-term winners? As I've already touched on, most cryptocurrencies are probably going to collapse. Their solution might become redundant, another cryptocurrency might do a better job, critical members of the team might leave the project, etc. There's a million reasons why cryptocurrency could fail and go to zero. If you're intending to HODL a cryptocurrency for the long term, you need to be confident about where you're putting your money and have a rationale for why it'll increase in value. Next, how are you going to invest? You have a few options to consider here. You could invest in chunks whenever you want, regardless of what the price is, aka dollar cost averaging. You could determine price levels you'd be happy to buy into your cryptocurrencies at, aka buy the dip. Or you could just set up automatic regular investments into your chosen cryptocurrency. Again, dollar cost averaging. You don't have to pick one path. You could do a combination of all of the above. Next, what are your conditions for pulling your money out? This is very, very important. When you invest money into anything, you'd likely have aspirations that it'll grow into real value. But when are you going to cash out and realize those profits? Are you going to cash out in 5 years, 10 years? Or is there a specific price point where you'll cash out instead? You can also determine what percentage or fiat value you draw out under certain conditions. Your cryptocurrency investment could go the other direction too. If you're not prepared to lose all of your investment, then you need to set up a predefined market condition where you will exit. So let's ask ourselves, why might you hodl? Most people hodl if they don't have time or motivation to actively invest in cryptocurrencies, and maybe they just want to easily gain some long-term exposure to projects that they care about. Maybe you just want to invest in some cryptocurrencies which you think have a strong long-term potential. Or maybe you just aren't confident in your technical analysis abilities and you have really no interest in learning how that works. So next, let's talk about trading, the short-term strategy. So what exactly is trading? Trading is a short-term approach where you're looking to maximize your returns and beat any gains which could be achieved just by holding. This is a high-effort approach which can be time-intensive. It embraces the volatility of the marketplace as price fluctuations offer the opportunity to profit from drastic changes in prices over short time periods. This is the opposite of the long-term strategy which I defined before, which looks to evade short-term volatility. In order to trade, you need to have a level of technical analysis ability. You need a firm understanding of how the market works. You also need to put time into monitoring the market and searching for opportunities that you can take advantage of. Because at the end of the day, cryptocurrency markets are fast moving and always on. Alrighty guys, so I hope so far you are enjoying this video. Next, we're gonna dive in a little bit deeper into trading, and then we're gonna talk about whether you should hold or hodl long term, or if you should bring trading into your system as well. If you guys are enjoying this video so far, make sure you hit that subscribe button. Make sure you smash that like button as well. So next, let's talk about rules and discipline of trading. So when trading, the first thing you have to figure out is where's the opportunity. You need to look for what cryptocurrencies have short-term and medium-term potential. The cryptocurrency market is massive. There's more than 1,000 projects listed on CoinMarketCap. How will you find or know what coins to trade? You need to decide that based on your edge and criteria for trading a currency. For me, I like to stick to high volume and high market cap coins and trade strictly based on technical analysis. I mostly focus on trading Bitcoin and Ethereum. You have to remember that if you try to trade too many coins, you're going to be spreading yourself way too thin, and in direct result, you will be less profitable over time. So focus on only mastering and trading a handful of coins, because remember that a jack of all trades is a master of none. So the next thing you have to figure out is what is your trading plan. Before entering any trade, you need to know exactly where you're entering and why. Then you must also know exactly where you're exiting when you're wrong, because let's face it, you will be wrong many times. Of course, we also have to know exactly where we're going to be taking profit when we're right. Once you have that figured out, then you need to incorporate your risk reward and position sizing to tie it all together. So by now, you're probably saying, man, this sounds just way too complicated. Why would I even trade? HODLing is just so much easier, right? So one of the reasons why you would trade is because you're confident in your own technical analysis ability and you want to leverage it to generate a bigger return on investment. Another reason why you might look into trading is because you have the spare time to search for opportunities and monitor the fast-moving cryptocurrency market. With the right system and rules, you won't have to spend much time watching the market. Another reason why you might trade is because you have a decent amount of capital which can be leveraged to generate sizable gains from small percentage movements. Better yet, once you're a profitable trader, you can leverage that capital to make even more gains on small moves, aka trading with leverage. If you've been hodling this year, you're up 100% so far in profit. But if you were trading every rise and fall, you'd be making profits on both sides of the market. And if you use leverage, you'd be making even more. So this brings us to the final question. What should you do? The right answer all depends on your circumstances, motivations, and goals. What's right for one person is the exact opposite for the other person. 99% of investors in crypto have been profitable hodling, and 90% of traders are not profitable. So let me start this by telling you what it is that I do. So keep in mind that my portfolio is constantly changing. At any time, I could be holding about 30 to 50% of my investments passively in cryptocurrencies that I think have long-term potential and are safe bets. So for that part of my portfolio, it's mostly just Bitcoin and Ethereum. I'm not really looking to do anything with this bunch for a few years, regardless of what happens short term. But of course, depending on the market cycle, I could be taking profits. I could be pulling some of my position out, which is what sometimes my portfolio, my holdings for Bitcoin and Ethereum could be as low as 20-25%. Next, I use about 5% for medium-term bets or just lottery tickets. Basically coins that I think are undervalued or just very volatile. If I think a cryptocurrency is overvalued, I might take everything out and keep it liquid so that I can take advantage if and when the market corrects. Next, I use about 20% on the other top 10 market cap coins and any other projects that I really believe in. With these, I do kind of the same thing. I'm in and out of them depending what part of the market cycle we're in and how high or down it's gone. So when it gets really high and hits those all-time highs, I'm usually taking profits on some of the positions, and when it drops down, then I'm putting that money right back in. Remember that there is always pullbacks in cryptocurrencies. Next, I use about 20 to 30% of my portfolio to actively trade the markets. Keep in mind that I've been actively trading markets for over 7 years now. And I've actively been trading Bitcoin for about 5 or 6 years. So if you're just starting out, I recommend this number to be a lot smaller. And finally, I try to keep about 10% of my portfolio in cash to buy the dip. I recommend that you guys always keep part of your portfolio in cash so that when there's a pullback, you can throw it all in. This is why it's important to always take profits. So the bottom line on hodling versus trading. If you don't have a lot of experience, you should enter crypto investing and or trading with caution. A conservative and cautious approach involves averaging slowly into positions and out of them. If you do this, you limit your risk. Remember, successful investing is all about managing your risk. Hodling is easy, but has some serious logistical problems, especially for those who go all in at the top or who hodl through every all-time high. Trading is harder and has more pitfalls to watch out for, but it'll set you on a path where you will be conditioning yourself to do what you'll need to do eventually. That is, buy and sell at opportune times to realize profits over time. Given this, we can say that a slightly twisted version of hodl, where you average into and out of positions, is the most beginner-friendly strategy. As one progresses in their journey, they're going to want to be able to trade effectively. It can make sense for even an inexperienced investor to ease into trading out of the gate. If you're going to trade, start off with small trades like less than 1% of your portfolio per trade and no more than a few trades per week. Make sure to use stop losses and start learning about technical analysis. We have many tutorials on trading in our trading tutorial playlist. If you can get down the basics like how to tell a bear market from a bull market and what sort of targets you're looking for to take profits or to buy, you will start approaching a point where a buy and hold everything only strategy will likely no longer be your best choice. That is to say, almost every cryptocurrency investor will benefit from refining both a long-term hodl strategy and a shorter-term trading strategy. Hodl might be the best strategy for a new investor, but buy the top and hodl to zero is actually one of the worst possible strategies that I can think of. Since this is true, we can't just fall back on hodl period. we need to have a slightly more personalized strategy that accounts for the reality of things. That reality being that most will get into the cryptocurrency market late, and hodling will simply mean exposing themselves to the pressure to sell over time. Alrighty guys, I hope that you guys have enjoyed this video and really understand now the difference between hodling and trading and are able to make the best decision for yourself. If you guys have enjoyed this video and found value in the content that we just provided for you guys, make sure to hit that like button. Make sure if you guys are new here to also hit the subscribe button and turn on that notification bell. Remember that we post 5 times a week. On Mondays and Fridays, we do market analysis. Tuesdays and Thursdays, we do reviews, tutorials, and market news updates. And on Wednesdays, we do live streams where we just talk with you guys. Thank you guys for watching this video and tuning in to the end. I will see you guys on the next video. As always, peace and love.